2024 was a funky year for real estate. Buyers and sellers were stuck on the fence waiting for rates to adjust to something more reasonable. Inventory was continuing to grow. All the while, affordability seemed to keep getting worse. It begs the question, how did the San Diego housing market fare? Well, I got all the data to show you exactly how we did and what to expect in 2025 as well. Today, I'll dive into a recent Redfin report that sheds a light on nationwide housing affordability and how San Diego fits among all the other major metros. Right when you think things will keep getting worse, this Redfin report gives us a different perspective.
What are you trying to say?
This covered here in this week's San Diego Market Matters, and I'm Karl, your San Diego realtor. Real quick, if you appreciate the information I provide in these videos almost every week, consider subscribing to the channel and liking this video. And if you're thinking of selling or buying here in San Diego, check out the link I have in the description below, where you can schedule a meeting with me so we can discuss your goals and how I can help you achieve them. Or you're welcome to call me directly on my cell. That's how most people do it, and that number should be in the description as well. Let's kick things off with a quick economic update. Friday's jobs report, the big one on the agenda to kick off 2025, dropped an holy beluga whale. Expectations for this report were 155,000 jobs added. The report came in that 256,000 were added, over 100,000 more than expected. As a result, unemployment ticked down to 4.1%, and the markets reacted not as you would have hoped. A strong jobs market and lowering unemployment means that the Feds are even less likely to cut rates at the end of this month and in March at their following meeting as well. The CME FedWatch tool is now projecting a dang near 100% that rates aren't going to get cut at the end of this month, which we already kind of knew based on what the Fed said at the last meeting in December. A strong jobs report and unemployment going down could mean inflation will continue to creep up. That is the main concern for the markets right now. Mortgage interest rates ticked up as the week closed out as a result of all of this. Now let's jump into the 2024 data that recently dropped to see how San Diego did and where we can expect it to go next. In 2024, San Diego's housing market showed some interesting shifts, but what do these shifts mean for you? And based on what happened in 2024, what can we expect in 2025? Let's dive into detached homes, your typical single family homes. In 2024, the San Diego market welcomed a substantial influx of listings, with 21,164 detached homes hitting the market. That's nearly a 20% jump from 17,681 we saw in 2023. Offering buyers much needed relief with more options to choose from. However, this boost in inventory didn't have the impact on the market that buyers had hoped for. I'll touch more on this point shortly. Sales metrics, a key indicator of market demand, also showed growth but didn't quite match the pace of new listings. We closed on 14,824 homes, up by 6% from the previous year. Notably, the average days on market held steady at 31 days across 2023 and 2024. Well, that's kind of odd. We had a significant amount of growth in new listings that outpaced the growth in sales, but our average days on market stayed the same from 2023 to 24. Here's where it gets even more interesting. Despite the significant increase in listings outpacing the growth in sales, with the interest rates hovering around 7%, the market dynamics in pricing tell a completely different story.
What do you mean?
The median sales price for detached homes grew by $95,000 to $1,050,000 in 2024, up from $955,000 in 2023. Similarly, the average sales price climbed nearly $97,000, reaching just over $1.3 million from $1.93 million the previous year. That's almost an 8% increase in the average sales price in 2024. This data clearly indicates that the demand in San Diego remains strong, pushing prices upward despite greater availability. It's a testament to the market strength and the charm or appeal of owning a home here. Now, switching gears to attached homes, think of condos and townhouses. The San Diego market for these types of homes also saw a notable shift in 2024. There were 12,389 new listings for attached homes, up from 10,049 in 2023. That's a significant 23% increase, signaling some relief in options for buyers, especially first-time buyers, which is the majority of buyers in this part of the market. But like with detached homes, the rise in inventory didn't necessarily ease the buying frenzy as one might expect. Sales for attached homes mirrored this uptrend, but with a more modest increase. We saw 8,296 homes close, marking a 4% rise from the previous year's 7,974. What's peculiar here is the change in how quickly these homes were moving. The average days on market for attached homes increased from 27 days in 2023 to 33 days in 2024. The shift indicates that while there are more homes available, they're taking slightly longer to sell. On the financial side, the pricing dynamics for attached homes were also upward trending. The median sales price climbed from $645,000 in 2023 to $675,000 in 2024, a healthy 5% increase. The average sales price saw a similar upward movement, reaching over $807,000 from about $665,000, almost a 6% increase there. So let's put this all together. Inventory rose, prices rose, days on market or market time rose. Here's what you can take this to mean. Demand is still persistent in the attached home side of the market. And at the same time, we're seeing a bit more breathing room due to the increase in inventory. This is also signaling us that buyers in this part of the market are becoming more selective by taking a bit longer in their search for the right home or the right interest rate. This paints a vivid picture of a market that, while flush with options thanks to a boost in listings, continues to see price growth driven by ever-growing demand. For those considering on buying or investing in the attached home sector, the current landscape suggests that more opportunities are available for you. Now let's break down what all these numbers really mean for you, whether you're thinking of buying or selling here in San Diego. First off, while we've seen a significant uptick in inventory this year, it hasn't been enough to tilt the market in favor of buyers. Yes, there are more homes on the market, which is good news for buyers. However, the continued rise in property prices, albeit at a slower pace than previous boom years, confirms that we're still very much in a seller's market. What's changing though is the negotiation dynamic. Buyers are starting to see a little bit more wiggle room at the negotiation table thanks to the increase in inventory, which means some more power shifting back to their side. Despite this increase in inventory, the persistent rise in home values through 2024 tells us that we're still grappling with a fundamental issue. There simply aren't enough homes available to meet demand. And let's talk about affordability. Rising mortgage rates have built a formidable barrier, yet it's clear that buyers are determined to push through these challenges. Their resilience is evident as they continue to purchase homes, undeterred by recent elevated mortgage rates. So what's the takeaway here? Despite elevated interest rates, buyers are still eager to invest in living in San Diego. We anticipate inventory to grow this year beyond the peak levels of 2024. This increase will continue to offer more choices to buyers. At the same time, we expect more buyers to enter the market, driven by rising wages, economic strength, and the allure of San Diego living. With these factors in play, we foresee a continued but slow pace of price growth throughout 2025. If mortgage rates dip to 6.5% or lower, we could see a significant influx of buyers. We observed this in 2024. Every time rates dipped, mortgage applications surged. So if you're considering selling, the market still leans in your favor. However, to truly maximize your home's potential, consider investing some time and resources before hitting the market. A fresh coat of paint, a thorough cleaning, updated landscaping, and perhaps even staging by a professional can dramatically increase the appeal of your home. Buyers today are more selective given the substantial costs associated with entering the market. If you can present your home in top-notch condition, making it stand out as the most inviting option among the competition, you're likely to attract intense buyer interest, which only drives the value of your home up. Now let's jump into Redfin's recent report about home affordability. Last year marked a peculiar milestone. For the first time in 4 years, housing affordability across the US did not worsen. That's right, the percentage of median income required to buy a median price home held steady, and in some cases, even improved slightly. Redfin's analysis shows that a household earning the median US income would only need to spend 41.8% of their earnings on monthly housing costs to buy a typical home in 2024. A slight improvement from 42.4% in the previous year. However, let's be honest, a 0.6% difference isn't much of an improvement, and you can round both these numbers and show that the affordability practically stayed at 42%. But let's zoom into San Diego, where the script flips a little bit. Despite the national trend towards stability, our city's growth is still present. As a result, San Diego saw a slight increase in the share of income needed for home purchases. In 2024, a San Diegan needed to allocate 67.3% of their median income to handle monthly housing costs on a median price home of $905,463. This is a freaking ridiculous portion of income. This figure is up by 0.6% from the previous year. So what's driving this? A few things. Inventory, interest rates, homeowners insurance costs rising, and the desirability to live here. Our median monthly housing payment for San Diegans buying homes with 15% down was an impressive $6,064, underpinned by a median household income of about $108,000. The lack of inventory coupled with the desirability to live here is keeping our prices sustained and growing. At the same time, with elevated rates and rising homeowners insurance costs, you're going to see higher portions of monthly income allocated towards the cost of home ownership. As we push forward into 2025, here's what to expect. It's not going to get any better until interest rates come down, period. Why? Because all expectations are such that the housing pricing will continue to grow in 2025. And here's the key. Save and do so as aggressively as possible so that you can get into a home if you don't already have one. It's only going to get more expensive over time, and the best way to fight inflation and secure your monthly finances is by owning a home where your mortgage doesn't change. And that's a wrap for this week's San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to my channel for weekly updates on the San Diego real estate market. And if you're considering on buying or selling property here in San Diego, don't hesitate to reach out to me for expert guidance tailored to your needs. As always, I'm Karl, your San Diego realtor. I'll see you next video.